Good morning, fellow traders from each and every part of the world that you're joining this series of the morning market call. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your financial broker and partner here in Kenya, East Africa, and every other part of the world. So today we are going to move with the same routine which has proven consistency. But before we do that, I would like to register to you that this is going to be a pre-recorded YouTube video, to mean that you can access this YouTube video later at HFM Kenya, that is YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left out in future content that we produce from time to time. So I'll give a 3-second moment of silence to allow you click on the subscription, like and subscribe, share widely so that we are able to grow together in this financial literacy journey. Thank you. With that out of the way, we move on swiftly. Number one, we begin with fundamental analysis. Quite a number of things that have been happening in the fundamental world, where we see data produced which gives us market direction. We'll go through them, the quite a number which were released yesterday, and we look forward to quite a number from the euro which will be released today. So let's dive in. Yesterday during Sydney session, we had the Australian CPI coming out. The Australian CPI came out at the same rate at 2.1%, which is also what happened in the month of September. This was slightly lower than expected, which slightly weakened the AUD. Later, after that, we had the Reserve Bank of Australia follow-up speech, which don't print out data. Then we had Bank of Austria manufacturing PMI. This affects the euro, which came out positive. Remember, guys, when you're approaching the eurozone, we understand that the euro is the pair that is used among the 20 countries in that part of the world, but we have 3 major leaders. This is Germany, Italy, and France. So when we see countries like Austria printing their data, yes, we consider, but we look forward to the big 3. So in regards to that, we have data from Germany, which came out yesterday also. This was during London session, perfectly aligning with that particular medium of exchange in that part of the world, that is the euro. Consumer confidence, which came out negative, slightly said to have weakened the euro to a certain extent. Right, as we move forward, we had a number of data coming from the United States, and this was a mixture. We had durable goods order, ex-defense month on month. We had durable goods order month on month. We had goods trade balance. We had the GDP growth. We had initial jobless claims. We had core PCE, which is the core personal consumption expenditure price index, which came out steady. So we also had the personnel income month on month. Now it is important to note that all this data which came out from the US, quite a number of them, were giving us mixed reactions. Some of them were coming higher than expected, some of them were coming lower than expected, some of them were coming steady. But overall, we saw all the data which was printed indicate that the US dollar economy might be struggling, okay, may be said to be struggling, which if we observe from the dollar index, we shall see that on the daily time frame, we closed on a bearish candle, that is yesterday, suggesting that the US dollar is weakening. The dollar index is a tool which is used to measure the power of the US dollar compared to a basket of its peers, okay? In short, compare the power of the US economy in comparison to other world or global economies which have got an open market policy and are said to be democratic in that sense. So moving on swiftly, move to the chart and see the indication of this. Now that we know that the dollar is weakening, very nice. We shall begin with our usual suspects. We go to currencies, major asset classes that we look for. We look at the currency pairs. We go to commodities. We go to some cross pairs. And into the future, we walk into stocks and indices. Now, with that out of the way, let's begin with Euro USD. We clear up the charts so we see clearly. For Euro USD, we see yesterday it closed with a bullish candle, which support fundamental analysis that, or the data which came out from the US was indicating mixed reaction of both positive and negative, but more negative, which is indicated here. Now we shall see for US dollar quote currencies, that is the currency of the US dollar coming in second. They're going to be in a bullish momentum. And for the USD based currencies, with the USD coming in first, they're going to be in a bearish momentum, supporting the narrative of a struggling US economy. So let's go to a lower time frame and see how this is behaving. We see yesterday we were able to break out from the consolidation that we noted during yesterday's series of the morning market call. And right now we are printing candles to the upside, suggesting the narrative of a weakening US economy right now, and we shall be monitoring more and more as they come in. So what are the expectations for us as traders? We want to see major highs being taken out. We want to see this high being taken out here. This is from the 1 hour time frame to give us a much more biased direction, right? We want to see levels being taken out. This is from the lower time frame, but especially on the higher time frame to avoid a lot of noise. But if you are a low time frame trader, day trader or scalper, we want to see low highs being taken out. For example, we want to see the 105,586 being taken out, suggesting the narrative of price moving to the upside. And when I say being taken out, what do I mean? I mean candles printing and coming and closing above this particular area right here, and this would give us much confidence to keep moving on the upside. On the contrary, in the instance we have candles closing below these lows, this might suggest that we might have a short bearish run, all right? But as it stands, we know the economic data which is coming out is suggesting otherwise. So if we move into another pair, that is GU, we see GU is respecting key levels. Right now we broke above the 1.26140, which was acting as a resistance. Now it has been broken, it flips to a support. So we want to see price bouncing off from here, supporting the narrative of price moving to the upside, with the GU recovering, slightly recovering in the day. But as you speak right now, we see that The bearish run is at negative 0.16, suggesting that we might be having a recovery on the US dollar. Now our duties is to wait for it to react from key levels, and which will support the narrative of a weakening US economy as per the data which was printed yesterday, as we look forward to much more significant data with much more impetus that is going to drive the market forces medium and long term. For AUD USD, we see that we are reacting from the key level 0.64715. As we speak, the AUD USD is trading bearish on the daily time frame at negative 0.18, suggesting that we might be in a retracement to possibly support the narrative of price movement to the upside. Remember, guys, to observe risk management as you undertake this, where we see fundamental analysis in line with technical analysis, where fundamental analysis tells us the economic health of different countries. We translate that to the charts, and when we translate this to the charts, we are able to know, are we buying for the day, are we selling for the day? Of course, reacting from areas of interest and observing market structure principles. For US dollar, Swiss franc, we see that we reacted from the 0.89462 resistance area of interest, and price is now trading to the downside. Would like to see price come and close below the 0.88022, which would give us an indication that this low will be broken, supporting the narrative that the US dollar might be losing its strength. For USD JPY, we know that recent data printed by the Bank of Japan, I think this was 2 weeks ago, suggested that the Japanese economy seems to be recovering. Now we see price coming and close below the 151.332 area of interest, where we see price was being constantly rejected. The first time here, the second time here, but here it was broken successfully with a candle closure. We want to see now price printing much more lower to inform the fundamental narrative, which we now marry with technical areas of interest to get in for entries which support the marriage of these two analyses. Moving on swiftly from the daily time frame, this is the United States against the Canadian dollar. We see that price came and closed above. This was the day before yesterday, the 1.39914 area of interest, resistance if you like, which now qualified it to be support. We would want to see a retest from these and a price movement to the upside. Remember that the day before yesterday, we had speculations that Trump is the incoming president of the United States is set to increase tariffs, which is simply increase the taxes on importation of goods from Canada, China, and of course Mexico. So this will tend to have the US dollar having a slight significance power over the Canadian dollar, but we shall be monitoring this to see how this narrative goes on. As we speak, we would want to see it come and retest the 1.39907 and price movement to the upside for us to get in with a much more suitable risk to reward ratio. For GBP JPY, Great British Pound against the Japanese Yen, we see that the Japanese Yen, just the way we have seen in the US JPY, that the Japanese Yen is recovering, and we see that we are in a downtrend here, suggesting that the Japanese yen is doing better than the Great British Pound. We want to see price even coming in, printing much more lower. We see right here at the 191.702 area of interest was broken yesterday. And now price seems to be retracing slightly to the upside. Would want to see it come and close below this particular point for us to continue confirming the narrative of price movement to the downside. Right here, down here at 190.748, we also see that price reacted from this particular level. We want to see price close below it now, even to confirm the buyers much more strongly. For gold, from a daily time frame, yesterday we closed with a candle with a longer wick from the top, suggesting that sellers were coming in. Fundamentally speaking, and of course in realization of geopolitical happenings, we see that yesterday during New York session, by the President Biden of the United States announcing to the world that the the Israel-Hezbollah agreement has been reached, and we shall see Israel forces withdrawing from the Lebanese territory, and this could have been the reason why we saw bearish momentum to the downside. But remember, also on the other part of the world, we see Putin putting much more emphasis on the war fronts with Ukraine. Remember, guys, in Eastern Europe, Russia invaded Ukraine with the intention of capturing this territory within 15 days. That was the plan, as reported, but we are clicking 3 years in February, so it's taking longer. So we see a little bit much more aggression of President Putin, and this was castigated by the authorization of President of the United States Trump, allowing President Zelensky of Ukraine to use US-based weapons. Okay, remember, don't get confused. Now we are in a different part of the world, from Middle East to Eastern Europe. And as long as this war continues in Eastern Europe, we will see gold printing price to the upside. It is important to note also that during a presser by President Trump yesterday, he articulated that the wars in the world seems to be coming down because they know he's coming into office. Of course, this is not something to go by, but it's something to consider. On the other hand, we have President Biden even going further and indicating that he is trying to have a conversation with Hamas, which is Palestinian-based, to have them also withdraw so that we have total peace in the Middle East. So if this happens, we shall be monitoring and updating you on our social media platform at HFM Kenya. We will see that gold will continue going to the downside, but as it stands, one war front in the Middle East, that the Hezbollah, which is in Lebanon, front fighting Israel, is calm, but on the other side, we have the Hamas from Palestine not yet striking an agreement. And in the other side of the world, Eastern Europe, we have more hostilities coming in. Remember, yesterday is where we saw President Putin unleash a drone attack, which has not been seen in the past, which gave much more impetus to the gold. Gold was printing high right here, but when we got to New York session, we started printing low because of the agreement that was reached. But right now, we want to see price printing even much more higher because the war in Eastern Europe is still in progress. With that out of the way, fellow traders, I would like to bring it to your attention also, this is by any chance not financial advice. This is purely for information purposes. So kindly do your due diligence and remember to observe risk management. Remember to observe risk management, and remember to trade with a reliable broker. HFM is a reliable broker with favorable spreads and swaps, with various products, 24-hour support, and over 60 awards in the world, which gives emphasis to the financial transparency that we observe as we partner together to walk into the future in this financial literacy journey. Until tomorrow, the same place, the same time, keep safe, God bless, and see you guys. Thank you.